Alrighty guys, welcome back to the best investing money management channel on YouTube. In today's video, we are talking about a stock that is up a whopping 76% this month, outperforming all of those indexes, the Dow Jones, the NASDAQ, the S&P 500, and a lot of people are saying that this is the next GameStop. This is the next AMC. So we're going to be talking about should you buy, should you sell this stock. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you have any questions, let me know down in the comments. So what is the stock? It's fuboTV, ticker symbol FUBO. Now, for those of you that don't know really what's been going on, well, we did have a couple of things. One, we had an earnings announcement. You guys will see the company still is bringing in about $221 million. They missed it on their revenue, but what they did do is say, hey, we have some management changes, right? The management is planning on changing some things inside the company, causing this stock to have a great move where it went from about $2.98 all the way up to about $3.71. And that was just the start of it. It then consolidated for a while and then have another move where it popped up to $4.60. And so being up, 76%, a lot of people like to say, well, hey, the train has kind of already left the station. And I definitely see where they're coming from. That's where I'm coming from is right now we're already up 76%. So it's kind of like the train has already left the station. So if you bought in right now, it's like buying in on a stock that's very overvalued for the time being. And I understand there is a possible short squeeze. This is why a lot of investors have been freaking out, is because of the short squeeze that could happen. You'll notice that this stock has been getting absolutely obliterated, where it went from 35 all the way down to $2.30. So 30% of the short sellers have already bought those shares back. So a lot of people are saying, well, if this stock continues to climb up, these people that are already shorting the stock are going to have to cover their losses. So if we get another 30% of people that want to buy those shares back because they want to cut their losses, this thing could easily squeeze up to $9, $10, $12 a share. On top of that, you'll have people just continuing to buy in on the stock. So for those of you that don't know what a short squeeze is so there's a way that you can make money when the stock market's going down. It's called shorting a stock. It's pretty much like borrowing shares and then you hope to buy them back at a lower price. But the issue with them is you have to buy them back. And so as the stock continues to go up, if you have shares, a lot of people want to cut their losses. And so you buy those shares back. And what happens when you buy a stock? It causes that price to go up. On top of that, you will have people that are wanting to buy the stock because of the management changes. So it's kind of like this perfect storm, very similar to what we saw with AMC, with GameStop, where they're having management changes. They're focusing more on e-commerce. So I definitely think right now, at least for me, there is some short-term potential, right? Where the stock could easily squeeze up to, $11, $12 a share. But on the flip side, being up 76% itself is a very, very risky investment, right? This thing could easily fall back down to $3 or $2.90 or so. So answering that question that everybody has is, Carter, should I buy this stock? I definitely think, for me at least, it comes down to risk and reward. So pretty much if I want to invest into this company, I'm pretty much risking, for this thing to go down to $2, right? So I'm risking about $2 to possibly make an unknown amount. And that for me is too risky. And the thing is this thing could be easily overvalued right now. And once that market hits, it could sell off. But on the flip side, it could pop back up again. So I just think we're in this murky water that a lot of people don't know how to navigate through. So a good strategy that I always recommend is to dollar cost average if you're very unsure about a stock. But dollar cost averaging is mostly designed for long-term investments. So given that this is more of a short-term opportunity, what you need to look for is some sort of support, some sort of resistance, and all of that good stuff. So we'll go ahead and see if we see anything. We do notice just this general trend line, which I'm sure you could use, but the issue with it is it's an sure line, right? It's not a moving average line. It's not an RSI line. It's not a VWAP. It's just a trend line. So I just think right now the risk is too high for the reward. And I know a lot of people like to say, well, Carter, this thing's going to go to the moon. Well, what happened with AMC? What happened with GameStop is they eventually got sell-off, right? And the stock absolutely got obliterated. And most people that bought in on the stock actually lost money. And so you have to understand that with these, high volatile, high risk stocks, you're going to have sell-off. It's not a matter of if, it's when, and it's just too hard to determine that. So guys, that is it. That is kind of what's going on with FUBO. I just think there's a lot of good things going on inside the company, but it's overvalued. So guys, that is it. Hope you guys enjoyed it. If you did, hit that like button, subscribe. We'll see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.